Well, what a week it was in the stock market. Of course, we had our Fed interest rate hike earlier this week. We also saw some drama around a Supreme Court nomination. We saw some strong economic reports. We also saw some controversy around stocks like Tesla and Facebook here today. Not only that, but today was the last trading day of the third quarter, and what a quarter it was. The S&P 500 was up 7% for the quarter. The Dow Jones was up 9% for the quarter. Those are some of the best quarters that we've had in over 5 years. So a very strong bullish market environment that we've been in here recently. Today in our trade application example, we're going to take a peek at a beaten down sector and see if we can find some value opportunity there. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 28th, 2018. First of all, if you are new to these videos, welcome aboard. We're grateful to have you in our audience. Make sure you click subscribe over on our YouTube channel. Also, while you're there, check out our description area where you can sign up for our email distribution list. That'll entitle you to receiving a daily tally of all the stocks in the S&P 500 that are giving you overbought and oversold cluster signals, in addition to alerting you when these videos are available. We're also heavy users of Twitter. My handle is @BrandonVanZee, all one word. I would encourage you to follow me. I would also encourage you to click like and retweet on all of our Market Outlook related tweets if you get value out of these daily videos. In addition to that, we're also on Facebook. You can see the group web address embedded in the logo in front of you, so feel free to join us over there as well. All right, let's go ahead and take a look at today's market action. As you can see, I've got chart 4B pulled up in front of us. So for those of you that are premium Market Scholar subscribers, you can follow along with my presentation here today by checking out the label in the upper left there. So 4B, this particular chart setup here, is basically a four-grid where we're looking at the four major U.S. equity indices here. So we're talking about the S&P 500 in the upper left, we've got the Dow Jones in the upper right, we've got the Nasdaq in the lower left, and the Russell 2000 in the lower right. Kind of a mixed bag depending on what particular index you're looking at here. Notice that the S&P 500 actually has something new to report as of tonight. We did go to a weekly bearish posture. Now, I want to emphasize weekly, meaning that it's not strong, it's weak. It's a weak bearish posture. And the reason I want to emphasize that is because trend is not broken yet. So if you believe price is the most important thing, then of course you're going to want to notice that it's respecting that upward trending moving average we have right there. Now this is a 30-day moving average on this particular chart. When we get a bearish posture using the market forecast, what's happening there is that green line, in this case, the intermediate term line, is falling out of the upper reversal zone. So it's just giving us a sense of a little bit of selling pressure. And today wasn't bad. Notice that the S&P 500 was down a whopping 2 cents today. In other words, flat on a percentage basis here today. But you can see for the last week or so, after topping out at about 29.40, we have spent more days than not to the downside. Again, for those of you that have an intermediate or longer term view, please recognize that we still have a series of higher highs and higher lows intact. Until this market breaks decisively down below that rising moving average, I will continue to assume that the market will remain somewhat resilient. Now you'll notice that things are a little bit worse down here in the lower right-hand quadrant. Notice that the Russell 2000 has been struggling quite a bit more than its mega cap counterparts. And you can see that despite Russell 2000 having the best day on the board today, up 0.36%, the chart looks a lot uglier than the other three on the board, where we're clearly trading below that moving average. Now remember, a lot of times that Russell 2000 is a leading indicator because it is a little bit more easily manipulated by the marketplace, as these are the smaller cap mom and pop types of stocks that are out there, as opposed to the big Apples and Googles of the world that represent the other indexes. So a lot of times you want to see that risk on type of behavior that money chasing behavior going into the small cap. So that's kind of a fly in the ointment that we're dealing with right now. Notice that the Dow Jones, I mentioned in the intro, was up 9% last quarter. Think about that for a second. A lot of times the stock market is only up about 8 to 10% on an annualized basis over the long term. So we basically got a year's worth of gains out of the Dow Jones Industrial Average in just one quarter alone. It was a very powerful rebound for the Dow and a lot of those mega cap companies. Well, it does look like all of a sudden the Nasdaq is coming back to life. Notice that there's a difference in the intermediate term lines of the S&P 500 that is gently falling out of the upper reversal zone, and then compare that down below here to the Nasdaq Composite, where we're actually starting to get a gentle slope higher towards the upper reversal zone in the Nasdaq. We'll talk about my sector selector tool here in just a little bit, but it does kind of confirm what we saw over there as well. One of the things I noticed on that particular tool was that we did have some strength out of the technology sector. And remember, the Nasdaq Composite is a tech-heavy index. It's not all technology, but it is still kind of known as a tech-heavy index. So the Nasdaq looks a little bit more promising right now than a couple of those other areas that are out there. Of course, last night's video focused on a tech stock with Xilinx. So we'll keep our eye on that sector going forward as well. So as it stands right now, we've got bullish postures out of the Dow Jones and the Nasdaq Composite, and bearish postures out of the S&P 500 and the Russell 2000. Let's go ahead and take a look at some other charts here while we're at it. Since today is a Friday, let's take a look at chart 4D as well. This is our 1040 crossover method chart here. Remember that this is it's going to be the same four indices that we're looking at here, but the difference in this chart is that we're going back 3 years in time here as opposed to 3 months. And each one of these candles represents 1 week in time as opposed to 1 day. And so that's why today being a Friday, a pretty rare day for me to be covering the market outlook. Usually David's doing this, but he's on vacation right now. So I figured I better take that opportunity to take a look at these 1040 crossovers, because it's not until Friday afternoon until these candles are kind of locked in place. Now, one thing I did notice that kind of changes things just a tiny little bit is notice the Russell 2000. We did get a red arrow that's appearing above this orange line here. Now remember, that's not the trigger that we're looking for here. It's just a kind of preliminary heads up that there is a bit more weakness when we see that. What it's identifying for us is that price did fall below that orange line. Now, for those of you that are new to looking at this chart, the orange line is the 10-week exponential moving average. The blue line is the 40-week exponential moving average. So price closed below the 10-week exponential moving average as of today on the Russell 2000. And you'll notice that it's been a really long time since we've had one of those red arrows, going all the way back here to March of this year, where prices did fall a little bit further below that orange line, but eventually rebounded and went on to hit new all-time highs. So we don't want to make too much of it. It's just a recognition that there is a little bit of stress there again in those small caps. The other areas of the market are holding up just fine. Remember, what we're truly looking for here is what you're recognizing by the background colors of the charts. When we have a green background color, that means we have a bullish longer-term posture using the 1040 crossover method. That's when the orange line crosses up and above the blue 40 period moving average. And so we've got a long ways to go before having any sort of true bearish posture using this kind of strategy. All right, let's take a look at a couple more charts here. Let's go ahead and take a look at our, let's take a look at the intermarket analysis 12 grid here. For those of you that are following along at home, remember that the background colors of these charts represent whether these instruments are either bullish or bearish using the intermediate term line on the market forecast technical indicator that you can find over at Thinkorswim or TD Ameritrade. And so as we look at this particular setup here, we're looking at a lot of different asset classes. Some of the bigger movers from today's perspective, we had gold that was up 0.74% today, but keep in mind gold has been in a really ugly downtrend. So anytime we have these one-day up moves, you probably shouldn't read too much into it. We continue to have difficulty making any headway from a gold price perspective. We continue to be trading below that moving average in this particular case. The dollar has been something that we've been keeping our eye on here recently. Notice the dollar in the lower left-hand corner did have another update. It was up 0.24% today. So that one's kind of been all over the board. For a lot of the last year, we've seen strength in the dollar, but in the last month or so, we saw this kind of mini set of lower highs and lower lows. And so all of a sudden, this reversion to the mean, we're getting very, very close to this prior high that we had back on September 4th. So that's the level we're all watching. If we can get back up above there early next week, then it's entirely possible that this shorter term downtrend kind of reverts right back into that that primary trend that we saw for most of the last year, which is a strong US dollar. We did see crude oil finish very, very strong here today as well. Notice that crude oil was up 2% here today, and we've been kind of looking at this reversal pattern that's been taking shape on crude oil for the last 3 months. You'll notice here that this kind of has the shape of that inverted head and shoulders pattern there, which is typically a reversal pattern back to the upside. We also saw REITs had a nice day here. Notice that REITs had this little green dot that showed up on the chart here. Remember, that identifies a security, in this case the REITs ETF VNQ, that is considered to be oversold according to the market forecast. And so we did get a nice reversion to the mean type of a move here today after seeing those oversold conditions. Let's take a look at a few more charts here. Let's now move on over here to chart 4F, which will be the foreign stock markets 12 grid. And as we look at this, you know, with the dollar strengthening again, it seems like there's a few more bearish charts showing up. India was one that I mentioned here this week earlier in the market outlook videos. It continues to struggle, down another 1.5% today. It does have another oversold condition, so it's possible we get a reversion to the mean, but that is clearly broken support there in India. So even if we do get a mini reversion to the mean, the assumption at this point then would be that it continues into its downward trend. You can see China is rolling over, at least in terms of FXI, which is kind of those mega caps, a lot of them that trade over in Hong Kong as well. But you'll notice that we have some pretty strong horizontal resistance right at about this level where it seems like it's trying to roll over here yet again. Of course, that's a market that is front and center of all the trade news here recently. Australia, here kind of in the middle, is looking a little bit sick as well. Notice that Australia had kind of a sideways channel for much of the last 3 months, and then it really fell out of bed here in early September, had this oversold condition, reverted to the mean, came right back up to this downward trending 30-day moving average, and now it looks like it wants to use that as a launch pad back to the downside. So be very careful there with Australia. It's not looking so hot. Some of the other areas that are struggling, Germany is really falling off of a cliff there. After Israel had shown some leadership for much of this 3-month period, it's really struggled here in the last week and a half or so. But keep in mind context here as you look at all these various charts. The best performing foreign market in the last 3 months on these 12 that we're looking at here is actually Mexico. Mexico is up 9% over the last 3 months, so this last quarter. Israel actually came in at the number 2 slot at 7%. So despite the pretty ugly end to the quarter, it still remained one of the best foreign markets to be involved in last quarter. All right, let's take a peek here at our next 12 grid, which will be the U.S. sectors 12 grid. All right, so now you're going to see that we do have more pink charts here. As a reminder, the S&P 500 is now pink, meaning we have a bearish posture using that intermediate term line. But right now we've kind of got our bullish concentration up in the upper right-hand corner. We've got technology, which I referred to a moment ago when we were talking about the strength in the Nasdaq. Technology all of a sudden catching a bid here again. So technology is one of our few bullish sectors out there. Discretionary is also bullish. We have energy bullish, and healthcare bullish. So those four are bullish, all the rest are bearish. Now keep in mind that telecom down below here, telecom went through a massive transition today. Today was the day when the GICS, the Global Industry Classification Standards, basically changed or converted a sector from telecom into communication services. So really you could probably replace IYZ with XLC instead, and maybe you get one more bullish one on the board there. But you can see by the looks of that chart, XLC down below, it doesn't look as good from a trending perspective as what we're seeing out of technology, discretionary, and healthcare. Speaking of which, let's have a moment to come on over to the internet. I wanted to kind of discuss that communications here briefly. Before we do, I just wanted to point out that many of you can watch this market outlook video on the blog here over at marketscholars.com. Not only that, but it's a quick and handy place for you to kind of show support for these videos as well. We ask for 3 clicks from you. One for Twitter right here, one for Facebook right here, and then another one right here where you can like it on our website. Now I noticed that yesterday I only had 79 likes on Twitter. That is a pretty low number. Generally speaking, we're looking for triple digits to kind of justify the amount of time that it takes to put these videos together for free for you guys each and every day. So just want to make sure that you guys kind of stay on top of that. And if you get value out of this, great. Go ahead and show that by clicking like over on Twitter. If you don't get value out of it, then we'll figure that out as well. Obviously, the views will drop off, and we'll figure out a better way to spend our time. As an example, it happens to be 7:30 p.m. my time right now, and it wasn't because I just got around to this. It was because I've been doing other things here today. I've got to do my sector selector after the market closes on Friday as well. So not only that, but then I have to do this video on top of it. You can imagine how easy it would have been for me to say, yeah, I don't really feel like doing the video tonight on a Friday night at 7:30 at night. So we do these for you because we hope that they are useful and helpful for you. Just make sure you're letting us know that by giving us 3 easy clicks there each and every night. Now, in addition to that, before David took off on his vacation, he did get around to updating our events calendar here at Market Scholars for October. We thank him for that. And as you can see, we've got a full slate of classes coming your way in October if you are a premium Market Scholars subscriber. Remember, we teach things like dividend growth investing, top-down trend trading, options for long-term investors, directional options, options inventory, strategy lab, portfolio management using ETFs, technical analysis classes, and then David and I each conduct a question and answer session, kind of like a AMA type of a situation where you can ask us anything in regards to what kind of our circle of competence is in our expertises in the market. So anyway, lots of fun classes to look forward to there in October for those of you that are premium subscribers. Now off to our blog. I've been busy here today with a number of different things. Remember, many of you can click on the word blog at the top of our website to access much of this material. This morning, as I do each morning, produce the 9 at 9. Of course, that's when we got the heads up that Tesla was going to have a very ugly day. You can see Tesla was leading the 9 at 9 to the downside, down 12% before the market even opened here today. So make sure you're checking that out on a daily basis. Also, I've been trying to record which companies have been growing their dividends on a daily basis as well in our dividend growth investing area of our blog. So that has been posted here as of tonight's close. Masco, Honeywell, and First of Long Island Bank all raising their dividends here today. So make sure you're checking that out. And then last but not least, I did get that sector selector updated as well, and I've been spending the better part of the last 3 days converting all of my materials from the telecom sector into the communication sector. Remember, there was a lot more that went into it than just a name change, because basically you had stocks like Facebook and Google that were once upon a time technology stocks that were placed into the communication services area. We also saw media stocks like Disney and Comcast that were once discretionary sector stocks that were also put into communication, along with the traditional AT&Ts and Verizons of the old telecom world. So there was a tremendous amount of, paperwork and upkeep that needed to be taking place behind the scenes, but I was able to get it all squared away, and I'll be sending out another email to many of you Premium Market Scholar subscribers later this weekend on how you can get all of your watch lists updated for that as well. So stay tuned to your email on that if you are a premium member. But let's take a peek here at the sector selector, since again I normally don't get to conduct the analysis here on Fridays when I'm building out this tool. And so let's take a look at it, as fresh as it can get right here. So as you can see, the sector selector is made up of two different parts. The top part is what I generally share with everybody, and then the bottom part I share selectively. But the top part will give you a good high-level idea of how the different sectors are moving. And remember, I'm actually ranking those sectors by 10 different kind of parameters. Things like relative strength, things like money flow, things like even the market forecast intermediate term posture and 1040 crossover method. A lot of these things that we talk about in these videos kind of all piled together and looking at it on an equal weight basis. Now I was able to pivot pretty quickly here because I'm not doing all of those rankings on the ETFs themselves. I'm going in and I'm looking at all the stocks within the Russell 1000 and doing an equal weight basis on all of those ranking systems within there. So there's quite a bit of work that goes into that each and every Friday when I produce this tool, but it is very comprehensive. Now this week is a little bit different because there was kind of a once-in-a-generation type of a transition that took place here this week with the telecom converting into communication. So I wouldn't read too much into this huge surge here that we saw from the purple line. It was just simply the recognition of a new sector right there. Last week, remember, this purple ball where telecom would have been ranked last would have only been containing stocks like CenturyTel and Verizon in them. This week, this communication sector is now including those stocks like not Time Warner, but Google and Disney and Comcast and all those media companies and those kinds of companies that went into the communication services. So going forward at this week and going forward, that communication will be a legitimate ranked there. But what we saw was really more of the same this week. Healthcare stayed number one. Healthcare has really been the stalwart of this market. As you can see, if there was a theme in the last quarter, remember this goes back as a rolling 3-month basis here. So this will go back to the first week of July, as you can see here. Well, if there was a theme, healthcare remained in the top 3 the entire quarter. So for those of you that stumbled into healthcare a quarter ago when it was ranked 3rd, you've done very well for yourself this entire 3-month time period here. And of course, that's been an area that we've really concentrated in on my Monday top-down trend trading class at noon Eastern time. Remember, that's where we use this tool mostly at Market Scholars, is specifically in that class where we're trend trading based off of a top-down analysis philosophy. Well, not to be outdone, although it wasn't quite as consistent at the top, notice that the industrials were probably the new kid on the block, I guess, if you could give it an award, because 3 months ago it was starting down here near the bottom, and it just kind of slowly and consistently started working its way from the lower left to the upper right. Industrials have been another hot area of the market. Now, technology actually showed up as number 2 this week. Now, remember, part of that is the elimination of Facebook and Google and Twitter and some of those types of companies. So you have to keep that into context as well. So it's going to be kind of artificially affected this week the same way that communication was, and to a smaller degree, discretionary was as well. But nonetheless, I think it is an interesting story because technology for a little bit looked like it was going to give up the ghost. FANG has started to underperform a little bit, and so now that FANG has been almost fully extracted out of technology, perhaps all those semiconductor companies and some of the other remaining, hardware companies like Apple can kind of go on a run here again, because technology is now at its best placement over the last 3 months. You'll see that it has not been ranked higher than second place in the last 3 months. It had been ranked third here for a while back in mid-July, but that was its highest level prior to this week. So keep your eye on technology, and again, that goes back to confirm what I already mentioned in this presentation earlier, which is we saw strength in the Nasdaq, and we also saw strength in XLK from a sector perspective. So those are some of the hotter areas of the market right there. Let's go ahead and take a peek here at the bottom portion of the graphic. Let me see if I can pull that up here. And so let me click on this again. And so remember, the bottom portion of the sector selector is generally only available to premium subscribers. And so if you want access to this every single week, you would want to be a premium subscriber of Market Scholars. But every so often, I will share it here in a more public format as well. So we'll do that here this week, just since this is kind of a special week where, again, communication is now its own separate sector. And the bottom portion of this sector selector tool is really going to dive in and drill down to the individual stocks that are making up some of the strong or weak areas of the market. In the upper portion of the graphic, you're going to see all the stocks hitting 52-week highs, and on the bottom portion, you're going to see those stocks hitting 52-week lows. Now, those are stocks within the Market Scholars 1000, which are mostly the largest, let's call it 970 US-based stocks, and then about 30 foreign companies there. But it gives you a good broad sense of some of the areas that are working in the market right now. And as I alluded to before, healthcare is kind of the cream of the crop right now. Notice all those ticker symbols right there. A lot of different G's that showed up here as well. Those pink G labels, those are stocks with growth characteristics. So that's part of my GIVE ranking system there. It's just an acronym that stands for growth, income, value. So those pink G's, for those of you that are looking for kind of trend trades, you might find something that you like there. As an example, Illumina is a stock that is within the healthcare space. Not only has 3 green arrows, but it's also in a strong industry, and it has growth characteristics with strong earnings growth, strong return on equity, strong return on investment, strong sales growth, etc. So, keep your eye on those labels as well. A few of the others that you can see on there too. You're going to find that there wasn't a whole lot in the way of income characteristics other than People's Bank with that blue label down there. But there were quite a few of those orange V's on the chart. And remember, more times than not, the companies with value characteristics are going to be the ones that show up at the bottom, because those are the ones where price is down, and therefore those valuation ratios, like PE ratios, would start showing up a bit more. But, this week was kind of interesting where we saw some stocks like Aflac up here with a value characteristic label. We also saw Total, an energy stock that's hitting a 52-week high right now. Of course, that's based over in Europe, but it is a cheap valuation for those of you that are looking for that sort of thing. So anyway, here are the 10 different things that I rank each sector by up at the top if you want to kind of look at those on a one-off basis as well. All right, so then let's go ahead and have our conversation about our trade application example for today. I'm going to come over here to chart 4A, and this is just a one grid for the market forecast view. And the stock that I want to pull up is Ben. Now this is Franklin Resources. This is a company that is behind Franklin Templeton. You can kind of see the logo up here, so that's why their ticker symbol is Ben, because of course Ben Franklin is the guy that you see on many of their TV commercials and different things like that. So you're looking at this chart and you're probably thinking to yourself, boy, that doesn't look so hot, does it? In fact, it doesn't. It's struggling. Now, the reality is it's been struggling for quite some time. And the reason that I'm interested in it right now is not because it has price momentum, and it's not because it's going to be a short-term trade. This is going to be looked at from a long-term perspective. First of all, notice that back here on September 6th, we got this oversold cluster signal when we had these red, green, and blue lines all in the low reversal zone on the same day. Notice that we basically called the bottom with those two cluster signals right there, and then it rebounded at around that level. Now notice it was right around 30 at that time. This stock, like a lot of financial companies, remember the financials were basically the worst on the board when we were looking at that sector selector a moment ago. Well, like a lot of financial companies, this thing has been in the doghouse for the last couple of weeks. This thing has gone straight down for about 6 straight sessions at this point. Where we end right now is right back where we caught a bid about a month ago. So perhaps there's some buyers waiting in the wings right there. Well, not only that, but I want to show you one other thing. I'm going to come over here to chart 3A for those of you that are premium market scholars, subscribers that want to follow along at home. Remember, the 3A chart is your dividend stair-step chart that I use in my dividend growth investing classes. And it's designed to help us kind of look at different levels on the chart to see where different yields exist. And you'll notice that as I pull up Franklin Resources here and I kind of zoom in on the last 5 years or so, that there's a blue stair-step line on this chart. Now that blue stair-step line, you can see up here, matches the blue label at the top of the graph, and it's basically showing you where a 3% yield would be for this specific company. Now, for those of you that aren't aware, this company is actually one of the 53 dividend aristocrat companies out there. So this is a company that would be a good fit for those of you that are dividend growth investors. This is probably not a good fit for those of you that are hyperactive traders or speculators, but for those of you that are looking for a long-term position, this one has some very appealing elements right now. It is a company that rarely, if ever, has offered investors a 3% yield. I know that at least in the last couple of decades, it has not offered investors a 3% yield. Prior to, 20 years ago, I'm not certain. I can't go back that far. But what I do know is that it's part of the dividend aristocrat list, meaning that it's raised its dividends for more than 25 years in a row or more, and it now has a very attractive yield that is not normally able to be acquired by folks that want to buy this company. So anytime price is above the blue line, it means that it has a yield of less than 3%. Anytime that price comes down and touches or goes below that blue line, it means that it has a 3% yield. So what I'm trying to highlight here for you is that you can see here over the last several years, it hasn't even come close to having a 3% yield. Back here, it probably had a yield of less than 2% when its price was high. But as most of you are aware, when price goes down, yield goes up. Now, you got to be careful with that concept because not all stocks are created equal. You don't want to just willy-nilly just go buy every stock whose price has gone down. But when you have a highly respected company with a long history of dividend increases, sometimes there's an opportunity there for those of you that are looking to think of things from an income perspective or just from a longer term perspective. So that's the reason I'm interested in this one at around these levels. Now, you could go out and just buy this stock outright. Again, if you have a long-term mentality, let's say you're going to put something away for your grandkids or what have you, and you're willing to hold on to it for 10 years, I think this is an acceptable level to be buying this stock right here, right now, and turning on the dividend reinvestment program and just forgetting about it for the next 10 years. I think you'll have satisfactory results. For those of you that want an even better kind of starting price, another possibility is selling a put. And you can do that through an options contract. So let me come over here to the trade tab. And I'll show you that as we pull up the November contracts. Now remember, this company will likely be reporting earnings during this time period. So by selling a put, you have to be committed to owning this company. So I'm making the assumption that this is a stock you already want to own at these prices. Now, because I think this is a special company, I'm going to be even more aggressive in my entry than normal. For those of you that have watched me do these short puts in this video over the years, you'll know that I almost always go down to a delta of, let's call it 30 or even 20 in some cases. This is a different situation where I already believe this company represents a unique value right here, right now. And so you'll notice that there is a $30 put that's available in November. That's basically your at the money put. Now notice that has a delta of 43. So in other words, this is an aggressive put sell here because I'm already comfortable with the ownership of Ben even as it's priced at this level. Now the benefit of having a more aggressive put sell here where we're doing it basically at the money is we get way more rewards than we normally would. Usually when we're selling a 30 delta, we'll get a 1% return on risk. Since we're selling the at the money strike here, the 43 delta, we're going to get a 3% return on risk. In other words, we're going to get 3 times the amount of reward than we normally would when I'm taking these trades. But again, you've got to be careful with this because you can only kind of implement this mindset on a stock that you believe to be of value right here, right now, and you're just trying to enhance your situation further. So I am going to go ahead and do this. I'm just going to do one contract here. So I'm going to sell the $30 put in November. I'm going to click on the bid price right there. And because this is a very aggressive trade, I'm just going to leave it at one contract. So just be careful with your position sizing on this. But I will leave it in there at 85 cents. I will change this to good till cancel just in case I don't get filled first thing on Monday morning. So let's go ahead and click confirm and send. Review it one last time, and you'll notice that if you do get exercised on this, your break even would be $29.15. So remember, this stock is already yielding 3% right now at $30.41. If you're going to get your break even price at $29.15, your yield will go up even further. You might have a yield of 3.2% at that point. So I'm going to go ahead and send that one in, and we'll see if we can get filled first thing on Monday morning. All right, well, I want to thank you for joining me here tonight. Appreciate your patience in getting this video out a little bit later than normal. As I mentioned before, I was busy doing the sector selector right after the market closed tonight. So it's late on a Friday night, but thankfully you have Saturday and Sunday to watch the video as well. Enjoy the football over the weekend. Best of luck with your trades and your investments. Remember, if you get value out of these videos, we would encourage you to click like and retweet on Twitter as well. Have a great rest of the day, everybody, and we'll see you next week. Bye-bye.